from that day to provide funding to these institutions.
How many investors do you have right now?
Let me put it this way, there's quite a number of them, mainly mortgage banks, commercial banks. Then we have the Ministry of Finance, which obviously represents the government. We have international financial institutions, and we also have sovereign wealth fund. Yeah.
Okay, so with this now, is it really possible? Because throughout last year, 2013, and even some years before then, we had the then Minister of Housing, Land and Housing, and some other groups talking about a million houses every year to sort out the deficit.
If you think about it, even if we assume that it's 17 million, let's assume that's the number. A million houses a year means that it takes us 17 years to raise that deficit. And imagine and also think about it that every year there'll be more, people coming on board. So it would take longer than 17 years, even at a million.
But is it possible to have a million each year?
Oh yeah, absolutely. I think it is. Absolutely.
That means you have plans. Let's talk about it.
No, well, I mean, my view is as simple as this. I think, first of all, is we have to address the issue of developer finance, right? Such that developers have access to consistent monies to be able to build, as many houses as they can. That's one. The second thing is also technology, building technology, improving the building technology. To give an example, here we're used to cement, that's it. Now, but we have to change that sort of construction materials. Not to say we can't use cement, but, lighter materials, etc. That's second. And I think more importantly is by sorting out the demand side. In other words, when as a banker, let me put myself as a banker now, when I know that if I finance Gloria Developments and they build, 10 blocks of flats, and individuals can go to different mortgage banks or commercial banks and get mortgages to buy these houses, I'm more comfortable funding you. Because today, one of the reasons why banks are skeptical to finance developments is because there is no mortgage market. After building, who buys it? Now, when you sort out who buys it, then I feel more comfortable funding the buildings. Or better
still, after building, the rich buys it.
No. This cuts across all sectors. I mean, if you listen to the literature that we've talked about, we've always mentioned the average Nigerian. And what that means is the houses are going to go from your 3 million, even less than that, to whatever levels. It's there to cut across the spectrum. Now, obviously, we have Federal Mortgage Bank, which also have a different structure. That's where you have people contributing to a national housing fund and then drawing from it.
What do you think of the federal sorry to cut you, the federal mortgage?
Well, I think my understanding is that Federal Mortgage Bank now will be repositioned to now focus on the neediest of society. So in other words, where you have contributors into a fund, and then those funds can now be used to provide houses to, for instance, that sector of the economy. So what we're trying to do is to actually take a two-pronged approach. NMRC dealing with the sort of like what I would call your lower middle class, etc. All right, and then FMBN dealing with the other spectrum, but at least attacking the housing space from a holistic perspective.
So just before we go on a break, what's really happening with the World Bank loan secured by the federal government, that about $300 million for this initiative?
All right. Basically, that's broken as follows. 250 million of that will go to NMRC. Now, NMRC, and that would go to NMRC in phases, depending on how NMRC performs. So in other words, we're not just writing a check for $250 million and say, just take it. The idea is, I'm going to give you some amount of money. Let me see how you do. If you do well, then I give you some amount of money, up to a maximum of $250 million. And that money is actually going in to capitalize NMRC. Now, if you go back to what I said earlier, NMRC will be effectively a capital market issuer. And in those circumstances, what it needs for people to feel comfortable that it has the capital to accept any sort of risk or buffers, right? The buffers to accept any kind of risk, the bigger it is, the more comfortable people are. So from that perspective, say for instance, NMRC ends up being 100 billion in capital, international investors, domestic investors feel comfortable buying its bonds.
All right, one of the big things you've said is that we can have 1 million houses each year. We'll come back on that.
Okay.
We're still with Mr. Sonny Ayere, CEO, Nigeria Mortgage Refinance Company. Join us again after this break. All right, Mr. Sonny Ayere, you're welcome back to the program.
Thank you.
Now let's continue from where we stopped. Basically, this huge fund, $300 million secured by the federal government, of course, raised a lot of hopes, expectations, which some have not been dashed yet. So let's just understand, are we going to have low-rate mortgages from now on, or what really is the big thing in the offing?
Okay, I think the first thing people need to understand is that $300 million, right, is a drop, in the entire ocean for the Nigerian housing market. And let me
Considering how huge the deficit is?
Absolutely. Well, to give an example, if you took that number of 17 million and you assumed that you provided houses to that entire 17 million, and each house was just 1 million naira, that's 17 trillion. Your 350 million is approximately, at best, something about 40 billion naira. It's like 0.00 some percent of the amount. So it just gives you an idea of the scale. So what we're doing with this 300 million is actually, it's like putting it as the equity of the company, all right, and then being able to leverage that. So if I have 60 billion of capital, say, all right, or $100 million of capital, if I leverage that 10 times, for instance, I'm looking at 1 trillion of homes. If I leverage it 20 times, I'm looking at 2 trillion. Maybe then I'm starting to make a bit of a dent. Do you see? So the idea is not to take the money and lend it out or to subsidize, which some countries have done. And I can tell you that Nigeria is the first time that it's in working with the World Bank that they've actually used this structure, which they could see was it made a lot more sense, because you actually did have more of an impact than actually lending the money out. And then you have a few mortgages, that would have a low interest rate. And then after the money runs out, what happens? Exactly. So what we wanted was something that can actually be sustainable. That's it. And we can build on it.
And I was just coming to that, because many administrations have had, very lofty plans like that in the past, and yet we saw very little coming out from it, because it just benefited the rich, so to speak. Is this going to be sustainable in whatever level?
Let me put it this way. Right now we'll be working on the, I think we start today, actually. If not, probably won't be in that meeting, but I have one of my colleagues join that. They will start working on the uniform underwriting standards. In other words, under what standards would we underwrite mortgages? What would be the loan to value? How much equity would an individual have to, put down for each property, and so on and so forth. Now, once we have this guidelines set, right, it means that effectively all mortgage and commercial banks will now use these guidelines to underwrite mortgages, whether the individual is buying a house for 1 million naira or buying a house for 100 million. Okay, there'll be different guidelines, maybe, for instance, 100 million, you don't expect someone like that to be putting in 5% equity. If you're buying a house for 100 million, you'll probably be putting much more equity into a house like that than if you're buying a house for 1 million. But the more important thing is that it's more to look at the capacity of individuals to repay their mortgages. What we've done, which I think is also important here, is for the first time, we're stretching the tenor out to 20 years. That's one. Secondly, we are trying to make the rates a lot more reasonable. I use the term reasonable in the sense that if the funding cost of this institution is, say, 10%, right? I mean, government today borrows at about between 11 and 12%, right? Which is a derivative